First of all, I want to ask you about the Suez and whether you think this blockage is going to have a major impact on supplies.
Yeah, well, supplies are already tight because of the OPEC cut, right? So anything that makes it even tighter is going to have an effect. I think a lot of the magnitude of this move today, though, is actually really about yesterday, which was overdone. So in addition to pricing in whatever impact the Suez Canal had, we also had to reverse yesterday's sell-off, which was mostly technical and didn't really seem triggered by anything new on the fundamental side. So there's a couple different cross currents, but yeah, for sure, like the OPEC's cutting, and so anything that would take more supply off the market is going to have that kind of effect.
Right. It sounds like, according to the notes I've read, Sam, that you actually think, though, that that getting over the virus, reopening the economy, that's going to be a bigger factor in terms of driving oil prices, driving oil stocks. How do you start factoring what we're seeing in Europe in terms of a third wave, new lockdowns across the continent, and also a reluctance to be vaccinated? More than half of people in Italy, France, and Germany polled have said that they think the vaccine, the AstraZeneca vaccine, which they have access to, is actually unsafe.
Yeah, so demand's been the main influence over the past 2 weeks, really since the top of the energy market and the correction we've had since the middle of the month. It's all been about COVID trends getting incrementally more negative and lockdowns as a result of that. And it shook investors because, you know, most people who are in the U.S. are thinking about it from a purely U.S. perspective. Everybody here is very bulled up about demand, especially in the summer and the second half of the year. People are excited to travel. Everybody's sort of applying that anecdotal thought to their view of oil demand, and it's very bullish. And so when you see something in another part of the world that's going the other way, it has sort of a sticker shock associated with it too. So that's been behind this kind of really rapid sell-off. But, you know, jumping off what I said earlier, nothing really changed fundamentally for the second half. This is all kind of near-term headwinds and intermediate hurdles that we have to get over. But in general, the view about vaccine distribution and declining cases as the year progresses is still there.
So there's no preference, for instance. I mean, I noticed that you liked Exxon and Chevron, the more sort of other places in the world focused as opposed to a European integrated.
Well, yeah, so the difference between Exxon and Chevron and the European peers really has to do with how much they're investing in renewables as opposed to oil and gas. And so more so than geographic splits on demand or COVID trends, it's going to be about market sentiment on whether there's a better return in oil today, which people think there is because the price is going up, or whether renewables is a better long-term strategy, which would influence the European price action. So that's what divides those two sort of classes. And right now, as long as oil is going higher, it's going to benefit Exxon and Chevron disproportionately in the integrated space because of that CapEx split.
Shepard Smith here. Thanks for watching CNBC on YouTube.